Hey, what's up, everybody? Welcome back to the Dean Rogers Show. Today, of course, I've got another special guest, Mr. Neil Timmins. What's up, Neil?
How you doing, buddy? Good to see you.
Good to see you, too. In fact, we just saw each other, and got to say, when you're sitting down, I can't tell how tall you all are, but you're a tall man. You're taller than me. I'm excited to get into this with you today. Let's tell everybody about you. So Neil's been involved in over $300 million in real estate transactions. You heard that right. His commercial portfolio includes apartments, industrial, office, mobile home parks, self-storage units. You've also got business verticals in commercial real estate, residential brokerage, construction, rehab, wholesale, property management, publishing, and a successful podcast. And your business passion is cash flow investing. So if you guys want to find and connect with Neil, you can find his podcast, which I was recently on, the Real Grit podcast. I went through after naturally and looked at all the guests you have. You have incredible guests on there. I think you told me I was your favorite one, which I really appreciate. I couldn't believe it.
You promised me that was going to be kept off air.
You can also find Neil LegacyImpactInvestors.com. You can also find him on LinkedIn. So, Neil, I just feel grateful for your time. I'm excited to dive in, man. Let's give the audience, the listeners, some juicy nuggets here today.
Let's great. I appreciate you having me.
Absolutely, man. Let's start with you. Let's talk about you. How'd you get into real estate? How'd you get into commercial? And kind of wrap it up with some bragging about what you've done and what you accomplished.
Sure, yeah, it's been a morph. When went to college, University of Nebraska at Omaha, I played football. So
nice.
That's I don't think I mentioned that. We share that in common. You played in the NFL, but I played in college. I played offensive tackle. So that's how I ended up over that direction. I was a lot heavier back in the day.
What's funny about that? I've ran into many NFL guys, and one just a week ago, and we were laughing about how a lot of the offensive linemen are big, tall, massive, huge bodies, and they usually get really slim and fit, right? Which you're slim and fit, and a lot of the running backs and receivers, they end up getting a little husky. Yeah.
So I went to school there, studied banking and finance, came back to Des Moines, Iowa. That's where I'm from, born and raised. Came back, went to work for a bank for a couple of years. My mom, who raised myself, my three younger brothers, all the kids are out of the house. She's like, I don't know what I'm going to do. I need to do something. And I said, you know what? You like houses, you like people. Why don't you just become a realtor? So she literally, like 3 seconds, she thought about it, and she's like, you know what? You're right. I do. That's what I'm going to do. So she went and became a realtor. A year later, we're comparing paychecks essentially from her first year in real estate and me at the bank, and she makes twice as much as I make. And I thought, okay, well, you know what it's like being a competitive person yourself. And I've got three brothers, so it's a hyper competitive family. I thought, you know what, if she can do that, I can do better. So that was my entry point. I decided to become a real estate agent. Went in, got in. Became Rookie of the Year, sold 37 homes my first year. Handful of years later, became a RE/MAX agent, bought a RE/MAX, became the top RE/MAX agent in Iowa when I was 29 years old. And then eventually got to a point where I hit absolute and complete and total burnout. I don't know if you know the life of a highly productive real estate agent requires a ridiculous number of hours. I mean, it is. I mean, you're working all day when people aren't working, and then you're working all night when people, aren't working, right? You're working all day when they're at their job, and then you got to go slip around and show them houses all night. Yeah. And so that ultimately took its toll. It got to a point at a personal family level where it was going to absolutely and totally break my family. And so I exited completely, sold my RE/MAX. Took a period of time off really to give deep thought to what in the world, what am I even doing? What am I trying to get accomplished? And it was really to get my time back to have freedom inside of my life. That's really what it was. And so got back into real estate and fixing and flipping. Still had brokerage and it just looked very different, but got in on the investment side, fixing, flipping, wholesale. Then eventually I got into passive. I use that in quotes. Passive investing, which meant buy single family homes, because that's what you do on the house side, right? And what I found out in a hurry after accumulating dozens of those things is like maybe the biggest lie that's ever been told, is that single family investing is anything but passive. There's money to be made, no doubt, but I'm suggesting that it's anything but passive. And so one day I got presented with an opportunity to buy a commercial property. And I say not just any commercial property, but one that has it's got some meat on the bone, if you will, not just a coupon clipper. And so didn't know a lot about commercial investing, although I've got a background in finance. I just didn't know a lot specifically about commercial investing. But what I do know a lot about is sinking my teeth into something and consuming it, understanding it, processing it, and then putting system structures and processes in place to go do it. So I had a moment of what I call my Eeyore voice, right? You're not good enough. You're not smart enough. You don't have enough money. You're not connected enough. And then I thought, you know what? Is what I'm doing going to get me to where I want to go? And that answer was a distinct no. So I took the leap of faith and bought my first property. Get a few months in, I'm like, you know what? This is like a gazillion times easier than houses. So a handful of months later, bought another property. That time was seller financing. And then, you fast forward, I think probably 4.5 years to today, and have been involved, as you rattled off at the top of the program. I mean, a number of asset classes. And today we're very heavily focused on industrial property, but have purchased and still own a number of asset classes.
Incredible. Though there were some incredible moments that defined where you're at today. Walk me through that. I mean, I think that's important for people to hear. How did you find what was going to work when you were going through those tough times?
Yeah, specifically back to the transition out of single family.
Yeah.
Transition out of brokerage. At that time, I didn't know exactly what I was going to do. Again, so many times when I'm stuck at a Y in the road, right? A fork in the road, if you will, I just ask myself the question, is what I'm doing currently going to get me to where I want to go? And if the answer is a no, I know that my actions are required of me to change in order to get me to a different path. I must learn something different. I must be around different people. I must consume something different. And so there have been multiple points, in my professional career where you just ask yourself that question. And it's not a hard question. It's just forcing yourself into thought, to give thought to that. The answers become pretty darn easy in terms of a yes or no. And then from there, it becomes pretty darn simple. As you know, this space that we live in real estate, such a giving environment to terrific community. And people want to be found. They want to help. They want to share. They want to do deals together. Mm. And so to get in a path, should someone choose to go one direction or another, it's not hard to go down. You just have to make that decision.
So I think one of the things that's interesting kind of thinking through that is, you'd spent so much time and effort to get to where you were and to have the success you were having. Did you feel scared to walk away from that? Something that you built and spent so much time, effort, and energy in? Or did you slowly transition out? Did you burn the boats and not look back? I mean, what was that like?
Yeah, in terms of when I sold my Remax, that was like a 60-day decision, meaning inside of 60 days from deciding, which didn't take long, to execution inside of 60 days. It was quick.
Wow.
Yeah. There was, in my mind, there's no point in delaying that. Now, that said, if you fast forward a few years, in my office, we still buy, fix, and flip houses, even to this day. Mm-hmm. I'm not particularly involved in that end of the business. So I got maybe 2 to 4 hours a week inside that section of it. And so largely what we're doing is focused on commercial real estate. We're at a spot where, if I fast forward a period of years, we probably won't buy any houses at some point in the future. Now that the thought of what I just said, at some point, that's all we did. That's how I made 90+% of all my money, was made flipping houses. And so to get to a point where myself, my team have grown to a point where that is now a thought and realistic and will ultimately get put on a calendar to go this day, this time, we're done. We don't buy anymore. We are solely commercial real estate investors. It's going to be cool, but that takes, the implication of your question is what's the evolution? Some of that depends how big the pain is, I guess.
Yeah.
For me, it's not so much of a pain. It's that the time, energy, effort is best focused at some point. Doing that produces the highest ROI, which ultimately for us is commercial real estate.
And you said your passion is cash flow investing. So are any of these deals that you're taking and you're flipping the commercial deals so that you guys can get a big chunk to use as capital to get in other deals? I'm presuming the answer is yes.
Yeah, you're spot on. Yes. Yeah. When we get an asset that's a deal, ultimately just not a deal for us, then it's a function of, cool, how do we maximize the dollars and cents associated with that so that when we do identify a deal that is one for us, i.e. cash flow investing, that we can lock it in. We've got a greater position of financial resources to be able to do that. So You're spot on. Yes.
So that's got to feel a lot different because that gives you, if you've got a truly more passive income source with cash flowing assets, then that's got to create a whole different life for you. I mean, what does life look like now, like on a daily basis, on a weekly, monthly basis? Do you just have the ultimate freedom as compared to before?
It's not quite there yet because I still push pretty hard because I like creating, not because one has to from a dollar and cent standpoint, but because it's so much fun. I like pushing the team. I like coming up with new things. I like figuring out how can we improve what we're doing? How can we buy more deals? How can we connect with more investors and ultimately drive returns for them? And from a passive standpoint, not to the point where it breaks us, just to the point where it challenges us and is, ultimately it's highly rewarding both financially, but then also, inside knowing that we've made an impact with somebody.
Yeah. So let's peel back the onion here. I want to dive in a little bit more here. Commercial real estate, why now? Why is commercial real estate good? Is commercial real estate still a good investment right now? I mean, tell me why commercial?
Yeah, no, good question. So I think any investment, any sound investment that is appropriate at the right time. And for us, that means, our underwriting criteria looks different than what it did 2 years ago, largely because the debt has risen, largely doubled in price from a couple of years ago. But for us, it's always been the underlying fundamentals need to be sound. So what are we doing now? It just means we're underwriting a little differently. We're understanding a tenant. So for example, an industrial property, a single tenant, what's that tenant look like? What are their financials? Are they making it? Are they thriving? There's plenty of businesses right now, even in today's environment, that are doing extraordinarily well, maybe better than they ever have. And so it's identifying those types of tenants. And when we find somebody on the other side who perhaps is struggling, those are the types of deals we just passed on. So why now? There's a lot of opportunity that's coming. Interest rates from commercial mortgages. Let me go back to this. Commercial mortgages are different than residential mortgages. So, they don't have 30-year fixed rate loans. It largely looks like loans are fixed on a 5-year basis. And every 5 years, that means the interest rate has to reset or, the loan comes 100% due and payable. Mm-hmm. So between now, 2023 and the end of 2027, TREP is the data source here. 46% of all commercial real estate mortgages will come 100% due and payable. 46%.
That's so much.
I mean, you're talking I'm over $2 trillion in commercial real estate mortgages coming due and payable. So what will happen is that there's plenty of investors out there who didn't execute on their business plan, and assets will be going on sale at a discount. And there's a tremendous opportunity for sound operators with sound business plans to be able to go in, swoop those things up, and lock up really long-term gains.
That's pretty incredible when you think about it, if you let it sit in. And so I think, like you said, the people that haven't executed on it, maybe they ran their numbers based on low cost of debt and now they're getting a surprise. Ideally, they're in a position where they've had a little bit of equity gain and they're not going to get,
Right.
caught or hurt in it. But,
Yep.
yeah, that's something to think about there. So that begs the question then, if someone like myself listening, who's primarily in single family investing, someone else who is either on the sidelines wanting to get started or also in the same spot, single family investing, which is where you got started too.
Yeah.
How does one get into commercial real estate investing? Where do you start? What's the best path? And I want to get to that level of detail. Like, where do you start? Because you drive by big buildings all the time. That's commercial real estate. Right. It's intimidating. It's scary. Where's the best place to start? Not like, how can you start? You could just go, talk to a broker and say, I want to buy it. But where's the best place, in your opinion, having done all these transactions, for someone getting started to start and look at?
I think the best place to start is as a passive investor, as silly as that may sound. And the reason is because when you're a passive investor, when you identify a sponsor or a general partner to invest with, you're going to understand and have the ability to ask questions of somebody who has to walk you through the whole process. How do you underwrite? What's it look like? Why this asset class? Why now? Why this area? The ability to go through and understand that and see what one has to report out to the investors on a financial basis. What information are they giving you? What will do from you as a general, you, Dean, specifically, what that does for you is you then get to ultimately see the whole playbook on here's what has to happen in order for me to be able to execute on something like this. And what I may find out, Dean, is either, great, now I can understand how to go down that path, or I'm so good at what I do, I'm better off just investing passively and sticking exactly what I do. Because there's plenty of opportunities. I invest passively in other people's deals, even though I don't have to, because there are other opportunities that people get that I'm not getting to, right?
Right.
And there's tremendous benefits. Well, the same reason you and I all of us invest in real estate. There's so many, it's benefit rich in comparison to the alternative, a stock market or something else.
So someone who's investing passively, rattle off some benefits that they get. Not only the new information and knowledge that they're going to gain. And I've heard that same advice from you, and I think it's really good advice. If you're wanting to play into a new game, do it with someone experienced passively. And for those of you who might hear that passively, like, what does that even mean? That means you become a lender on the deal. Like, you're taking your money that's in your bank, you're giving it to someone like Neil and investing, securing your investment against the property, right? And now you get to go through the journey with Neil. You get to learn, go through that experience. You get to ask Neil questions, right? Because now you have a different level of access and relationship. And what are some of the benefits? Like, rattle off.
They come in as an owner, just like I come in as an owner. So they're an equity position, not a debt position. We actually go out, secure the loan, provide all the guarantees to the loan. Yeah,
that's a good thing to call out.
They're not a lender to us. Yep.
Okay, that's a really good point to call out, because you as the operator, you can structure a deal how you like. You could have ownership, which means you have equity in the deal, which is a different thing, or you could lend your money in a debt position. So that's good. So with you like to do it with equity.
Yeah. I like them that way. They can have the ride with us, just like I have it, just as an owner. So what are the course of the benefits of owning a property? Especially in a passive standpoint. Well, first you get tax deductions.
That's huge.
So you get the tax benefit. Of course, you get cash flow and passive cash flow. So we're out there working and executing on the business plan, so you don't have to be the one who handles that. What you don't have is you don't have any sort of guarantee. There's no loan guarantee. There's nothing that you do from an operational standpoint or from a loan standpoint. So, Dean, as you know, if you were to go out and buy something, you got to go ultimately get a loan. And in many cases, that means an unlimited personal guarantee against that loan. A passive investor doesn't have any of that.
Wow, that's good. Right.
And then naturally, as you said, you got to learn along the way. So you have total understanding about what's going on there. And you can, some of this is diversification, outside of some of it's market diversification, could be an asset class diversification. It depends on what your portfolio looks like. And all this, it comes, of course, gets bundled up with, you want to connect with somebody who's aligned to your risk tolerance. I like cash flow investing. We go and we got to take risk. We're going to go get a loan. We're going to buy a property, ideally with a tenant in it, or one we can quickly put a tenant into so that they pay us back in cash flow. The extreme of that on the other side is development. Buy raw ground and you're going to go develop a property. That's swinging for the fences. You may do exceptionally well. It comes with a much higher degree of risk than where I like to operate.
Yeah, that's a good point. I'd have to agree with you. I'd much rather buy something that exists. I can come in, I can optimize that asset, right? I can improve upon it, but I don't have to deal with the piece of dirt and hoping everything goes right along the way. That's just a different degree of risk. It's also a different degree of expertise.
Correct.
You need a longer timeline. It's just a different animal. Obviously, we know some people that have done very well with that, and others that haven't. So,
I think we're at a curve of the environment where interest rates are rising. Nobody knows what interest rates are going to be in a week. You sure can't predict it out a year. And so, the idea of breaking dirt and hoping that the interest rates are going to be at a spot when the project's done where you can lock it in is challenging. Yeah, not one I want to take not the risk I want to take in this environment where we sit today.
Yeah. So someone who's looking to invest passively, the way you kind of put it together here and helped me understand, what is the typical minimum amount of money someone needs to invest to get involved in a deal like that?
Good question. Every sponsor is different. $50,000, 50 to 100, somewhere in that range. That'd be a typical number.
And what is a typical, and I know this could widely range, especially with commercial. What's a typical purchase price look like? What are the size of these deals look like?
Yeah, you're right. They can widely range. We target here in the Midwest industrial properties anywhere from 2 to 10 million. It's really our sweet spot in terms of where we seek to live. But you're right. There's plenty of other things out there that could be, $50 to $100 million, just a much bigger assets.
Got it. So how many people end up getting involved typically? Because I know there could be someone who comes in and brings all the money and they fund it and they want to be the largest, the highest percentage that they're allowed to have in that deal that you're offering. They want to have all the equity that you're offering for that particular lending opportunity. Now, what was I going to say is how many people are typically getting involved in a particular deal?
Good question. On average, we target $100,000 from our investors. That's where we target. Now, sometimes it's higher, sometimes it's lower. And so, just take that. You need $3 million divided by $100,000. You got 30 people in the thing.
Yeah.
Yeah.
Awesome. So for you, where do you find these people? What type of people are typically going to be passively investing in these type of deals? Yeah,
you've got two distinctly different types of people. One is people from like us, people are in our industry or active in our industry. They want additional exposure. They like certain asset classes. They've got money to put to work, and they understand already that how benefit rich investing in real estate is. So you've got that. And then the other side of it is you have totally passive folks. And what I'm intending to say is folks who are not in our industry. They're doctors, they're lawyers, but they're also just, kind of I'll classify them as, your kind of casual millionaire, if you will. They're just folks who want to put dollars and cents to work. They're concerned about the stock market. And that has been all over the board. And they want to put dollars and cents to work. They love the idea that something's real. Literally, you can drive by, you can go walk the parking lot.
Right.
The idea of it being real, fixed rate, debt, us producing passive cash flow, passive income is what we're seeking for. Sound tenant in the place, just paying the thing down. What we do, the goal for what we do is to do it right, so right that it's absolutely totally boring. So we got a tenant in place. And it just is month after month. It just becomes routine. It's not particularly exciting. That's what our goal is for these investments.
Yeah, makes sense. Okay, so I obviously get the you know, real estate community masterminds, meetups. Pretty easy to go into those rooms and say, hey, I have an opportunity.
Sure.
How do you get your opportunities in front of people who are not at these events, that are doctors,
Yep.
who are successful business owners, who are the casual millionaire? How do you get in front of those eyeballs?
Yeah, there's a couple of ways, conversations like this with multiple podcasts that you can be on, and then, networking in and around town. I've had the benefit of being in Des Moines in my professional career for 20 years, plus or minus. Sold nearly 2,000 houses in my career, touched a lot of people. And so that just goes a long way. Just, I've got a big network inside of real estate and sold a bunch of stuff. And so going back and tapping that network to understand, who I should connect with and who's got, again, who's looking for this. So it's not, for most people, I would say, you're not going to sell somebody an investment. People are just naturally, intrigued by real estate, and a bunch of folks are just, feel like they've got enough exposure to the stock market and want to have a conversation. So sometimes they seek us out. They find us on our website, download one of the free reports, and we get in touch, book a call from there.
That's awesome. Do you have any ninja tips if you're going into a networking event?
Yeah.
And you're wanting to, subtly drop that you have an opportunity that's available, right? That's beneficial for everybody.
Yeah.
How do you start that conversation? How do you come in and say, hey, Mr. Doctor, I'm just meeting. By the way, I've got an opportunity that's great investment opportunity. What do you think? How do you start that?
Yeah, we do a couple of things. And one of it is, on the front end of that, is to build a relationship. This is what I do. Right. Here's what I do. And occasionally we've got opportunities that pop up that become available for folks. And, we just take the conversation where it goes. You'll know if somebody's got an interest in it, wanting to have any conversation of any nature relative to that. And then you just go from there. We send out a newsletter. So for some folks, it's just a matter of staying in touch, staying connected. And then when we've got an opportunity, because as you can imagine, there are opportunities, which means they come on occasion. Right. Otherwise it'd be never ending, right? It'd be evergreen. We don't have that. So when we've got something that we lock it up, go through our process, then it's a function of us reaching out to our circle and going through, presenting that, having our webinar, presenting it there, asking, answering all the questions, and seeing who has an interest.
Yeah, makes sense. So my next question for you is, what markets? Now, there's people that have a lot of different opinions on where you should be investing. Iowa, Des Moines specifically, happens to be your backyard. Yep. Is that where you started? Is that where all your investments are? Kind of walk me through how you pick where to invest and what your thoughts are on that.
Yep, absolutely. Yeah, that is exactly where I started, right in the backyard, leveraging the relationships and the context that I had and have. And from here, my focus is very heavily on industrial through the Midwest. We've got some select markets like Kansas City a lot, like Minneapolis. So there's a number of markets through the Midwest. I just named the two closest ones that have been trending very positive, and I like the trajectory in which they're heading down. And I think there's some, it does two things, right? In comparison to, say, a market you're in, or anywhere in California for that matter, we produce better cash flow here. There's things just trade at a more reasonable level that allow us to produce cash flow. I think we're insulated in many cases from some of the downsides that exist. So if you think about Florida, for example, they've got some very significant weather, hurricanes specifically, and the insurance, let's call it a crisis down there, is going to deeply impact a whole bunch of people who have investments down there. Mm-hmm. And depending on your lease structure, it may not matter. If you got a triple net passes through the tenants, it may not be a big deal. But we just don't have exposure to that sitting in the Midwest. Our weather looks a little different, but we don't have that massive exposure in which they're going through right now. I like the Midwest. There's a lot going on here, and a bunch of people from the coast just kind of don't give much thought to it, which I love too. So there's a little less competition than where you sit, but there's still plenty of competition.
Yeah. So, so for someone who might not be in the Midwest,
yeah,
is that a challenge to because I know people do it, but from your lens, from your seat, do you see that being a challenge if you're not in that area to invest there, or do you see that as something that is achievable?
Yeah. So if you're going to be what I hear you saying is, if I want to actively invest and I want to do it in the Midwest, but I don't live in the Midwest, is that a challenge? I don't think it's any more challenging that, if you live in LA and you want to invest in Phoenix, out of the market is out of the market. So you're just going to learn a different market. That's all. As soon as you exit your place and have to get on a plane anywhere, that's going to hold true. You just want to learn that market, understand it, have the matrix to decide what market you want to enter into. So you have an understanding of that. I like population growth. So there's segments of the Midwest, like Chicago, I would stay out of. So there are spots that I think are very strong and trending in a very positive direction. So we want to understand, the driving factors, population growth being a good one, job growth on top of that. Job growth is a very large one. And the higher the income job, the better off it is, because they're consuming so much more.
So you brought up some good points that made my wheels spin here and start thinking, where do you find your research? If I'm wanting to look for opportunities, are you typically looking at opportunities that have found their way to you, or are you proactively spending time to research specific markets and saying, all right, I'm now going to look for opportunities here, and I'm going to talk with brokers. I'm going to look on LoopNet. I'm going to look at the different places that present opportunities. What does that process look like for you?
Yeah, you hit it on the head. Yes, it's proactively do market research. So I like CoStar a lot. They produce a number of reports and news, really. Some of that news will lead you to a different company, like a CBRE. There's plenty of Cushman, Wakefield, Colliers. There's plenty of big brokerages that spend a whole lot of money and time, energy, and effort to produce market level data reports. And so consume those to understand, what does the market look like and where's it headed? And then from there, excuse me, it's a function of reaching out proactively to the brokers to build relationships. It's a relationship game. So you asked me a question earlier about how do you go to a networking event and you want to raise dollars and cents. At the end of the day, it doesn't matter which side of this on, deal finding or deal funding. It's a relationship business. And so it's for us on the deal finding, it's reaching out, building relationships with brokers to understand what's transacting there, where are things going, and working real hard to make sure we provide a live value to a broker. We do what we're going to say we're going to do. We execute. We can actually close.
Yeah. So do you find those reports are, let's call it accurate, in the sense that they're not skewed? They're not, they spend a lot of time and money to market, hey, Des Moines, Iowa is the next gold mine. Come here. Yeah. And naturally it's someone who's doing business there and wanting to bring more business their way. Do you have to filter and sort through that information and do your own research on top? Or do you find that, yes, this in fact is really good information, I'm going to spend a lot of time consuming it and making decisions based off of it?
Yeah, I'm going to spend a lot of time consuming it and then understanding, a lot of it's data driven, understanding what went into the data. So for example, if a rent survey gets done, did they survey 10 apartments? I'm making up an asset class, 10 apartments, for example, or did they survey 100 apartments? Well, I want to understand that, because if it's 10, I'm going to take it probably with a grain of salt to go, the data probably didn't seem quite wide enough. So the underlying data, what's driving that? What's driving the headline, meaning what's really in the guts of the data to be able to drive that headline. And then from there, I'm not just picking one source. I want to end up with multiple sources to get a really good understanding of what's this market really doing. Having the conversations with the brokers, what's the market really doing? Where are things really happening right now? Because the data that you get in a report, it's from some period of time ago. And so having conversations with brokers, what's really happening today, helps a lot.
Yeah, my understanding is that those broker relationships become extremely important to find, acquire, and continue to build your business. because they are the closest to the deals most of the time.
Correct.
And oftentimes will have what you'd call pocket listings. They have ones before they hit the market, and they'll go to people like you that they know, like, and trust and know will perform.
Somewhere between 50 and 80% of all transactions get done by brokers are done off market through their own small list of buyers.
So
it's imperative. It's imperative to have relationships. Yeah, I just had coffee. I had coffee this morning with somebody who I've known for years and years and years, who's a broker. And, we transacted about 14 months ago. We got a killer property same thing. One phone call to me. Here's the deal. Bullet point. Okay, write it up. I know the property, know the area. That was it. One and done. They don't need to sell the property 3 times. And the seller, when they come to an agreement with the seller, it's here's where we want to go. And sometimes it's I want to not price it and I want to take it to market and see where the market prices it in the form of offers, or this is my price. Go sell the property. Well, okay. They're not there. They don't need to sell it twice, right? Yeah. Done. Pay the price. It works for all parties. Great. You got a winner.
Awesome. That's so how do you find those relationships? How do you find the brokers? Is it the ones that have the billboards up in front of the signs and you got to just, send them chocolates and wine all the time? Or how do you get in front of those brokers that are doing most of the deals?
That's the grind. That's the grind right there. You got to go and literally it's a function of us going to the market, talking to several of them. We've got a whole methodology relative to let's get in front of these people. Let's talk to them. Let's build a relationship, knowing that we're not going to be for everybody and everybody's not going to be for us. And you don't need everybody. You just need a few. And so it's building, it's connecting ultimately, it's connecting just like you're friends with anybody, right? It's finding the commonalities that you have in place past real estate, because we all have a commonality of real estate. Got it. But past that, how we just connect with somebody and then ultimately to build that relationship that they get the confidence to know that if they're going to send you a deal, you're actually going to, how quickly do you reply? If you put something under contract, do you retrade it, or you got to close? You got to honor your word, and can you get it done? Because what they can't have a property go under contract and then fall out. Now, yes, it happens, and it should happen when things are unknown. But when things are known, i.e., the buyer just doesn't do what they say they're going to do, that's not a buyer they can trust. They have too much on the line. This is how they get paid. They get too much on the line to go down that path. So your word matters.
Yeah. And from my understanding, that goes for any business, right? If Correct. You want to have good business,
yeah, you're right.
You got to do it that way. But boy, could it matter any more than in commercial real estate? Just some of the best, biggest opportunities can come from just performing.
You think between, I'm in a ballpark. I'm gonna give you a range. Think between, a deal that a commercial broker might do. It varies, of course, but let's call it somewhere between 5 and 20% of their annual income is in one deal. Naturally, it can vary, but you get the idea. 10% of their annual income is on this one deal.
Yeah,
it's a big deal. You better live up to what you're doing. Yeah, they want to have trust and faith in you. Once you build that, they put more deals in front of you.
Absolutely. So if someone's listening to this and you just got them super excited and they're like, yes, I am grinding way too hard. Maybe I'm speaking for myself right now, but I'm grinding way too hard. I want to living my life like Neil and have more cash flowing investing. Where do you think is the best place to start? You said your backyard, which I have to agree. Okay. Starting with building the relations. Those are all obvious. What type of commercial real estate asset is the best place to start? What's the safest? What's the easiest?
You cut my question because I thought you were going to ask me where should I start. I was going to say decide on the asset class.
Yeah.
We have bought 6 asset classes over the last 4 years. You're right. Industrial, office, self-storage, mobile home parks, apartments, flex. I kind of lump flex inside with industrial. It's not exactly the same. It is its own asset class. And I guess number 7 would be retail. So within there, just, I would be suggesting understand what are the pros and cons of each. to be able to make it, and then ultimately make a decision. What avenue do you want to go down? Because there's pros and cons with each. None of them are perfect. None of them are perfect. So it's deciding what path to go down. For single family investors, the easiest one for most people to get their head wrapped around is apartments, right? Whether it's because if you get your head wrapped around a duplex, you can get your head wrapped around a fourplex, you can get your head wrapped around a 100plex. It doesn't matter.
It's good.
So that's the easiest one for most folks, is why you see a lot of people just make that shift in there. And that was I went from single families and probably about a duplex here or there to an 8plex, and then eventually bought the next building past an 8plex was 17,000 square foot industrial. And so I just happened to fall in love with industrial from the what it is to the management. It's management light in comparison to an apartment, and that lines up with my intended lifestyle. It's just a lot easier to manage that than it is to manage apartments or to manage self-storage, for example. Self-storage is really, it's an operational business. There's a lot that has to go into self-storage. Just because, you got 150 units, for example, that means 150 people are paying likely this month, right? If they didn't sign a contract. Every month, there's a collection. There's just things going on. People are going in and out of those. There's an operational business.
Yeah.
Not just real estate. Yep.
Whereas industrial's primarily triple net leases.
Triple net leases, long-term triple net leases. Yeah. Yeah.
Which, for those listening don't know what triple net lease is, that means they're paying the rent, they're paying for any improvements, and they're paying the taxes and insurance. So
tax and insurance.
You pay for nothing.
Right. Yeah. It gets a lot of, it's a pretty easy gig.
Yeah. No kidding.
Yeah. Yeah.
Well, awesome, man. Neil, it's been so great to have you on again. Neil Timmins, guys, if you want to connect with Neil, which you should, I always urge everybody to reach out, because new relationships form new opportunities. So, find Neil on the Real Grit podcast. You can find him on all the different places you find podcasts, YouTube, Apple Podcasts, Spotify, all those good things. You guys can find Neil at legacyimpactinvestors.com. Find out more about Neil, what he's doing, what he's up to, and of course, connect with him on LinkedIn. Neil, it's been an absolute pleasure to have you on. I know I've got a lot more to learn about commercial, so I'm going to make sure we stay in touch, but I appreciate all the information, knowledge you shared with the listeners.
Man, for anybody who wants to learn more about commercial, you want to understand why or what it's like to passively invest right now in today's economic environment, on my website, which you referenced, legacyimpactinvestors.com. I put an ebook together, totally free. You can get it there and just download it.
I'll be doing that then.
Thanks so much for having me on, Dean.
Yeah, thanks for being here. Okay, guys, till next time. Peace.